Yeah, I think we should. Oh, okay. We are live now. Hi, everyone. Hello. Welcome back to this episode of VCTV. So, on this episode of VCTV, we're going to discuss about the benefits. We're going to talk about institutional investment into the cryptocurrency space. It's a very interesting topic because with the Bitcoin price, oh my God, I don't know what's happening with my accent today. But anyways, with Bitcoin price, picking up, lot of institutional players are actually in this field. Cryptocurrency was once seen as the wild west of investments and not seen as a suitable product for institutional investors. However, with cryptocurrencies such as Bitcoin, as you know, booming, central banks are considering their own digital currencies, which is CBDCs, as we call it, and the exchange-traded cryptocurrency products aimed at institutional investors, which are being listed on regulated exchanges as well. As institutional crypto investing is becoming more mainstream, more and more institutional investors are looking at cryptocurrencies seriously and asking if this is really a digital gold. So let's talk about this topic today on this episode. Before I start introducing the speakers of the show today, let me introduce myself. My name is Sunny Mohanty. I'm the regional director of LATOKEN based here in Singapore, and I am the host of VCTV Asia. So I welcome you all, Dr. Moraine from Singapore, Thomas from Germany, Munich, hi, hello, and Adrian from Romania. I'm going to start with the newest speaker who just joined me for the first time on this episode. It's Adrian from Sarah Global Ventures. Hi, Adrian. Welcome to VCTV Asia. Let's start with your intro and background, please. Thank you.
Hi, Sonny. Thank you very much for the invitation. Hello, everybody. It's good to be somewhere for the first time. Usually I go into afternoons and evenings, European times on VCTV. I'm Adrian Niculescu. I'm a serial entrepreneur and investor. My genius zones are marketing, sales, and business development, and I love keeping my hands dirty in these areas. Besides my advisory roles and board venture and board membership slots, I'm actively involved with few projects. CloudCoin Consortium. CloudCoin is a post-blockchain digital currency. Faster Capital, a Dubai-based accelerator and incubator for startups. Sarah Global Venture, which is a London-based venture capital firm. And also I'm a mentor in Richard Branson's Virgin Startups program in UK. Happy to be here and to contribute.
Wow, good to know that about that. The last point just mentioned. Thank you so much for that, and welcome to VCTV, Adrian. So next I have Thomas. Hi, Thomas. How are you today?
I'm fine, thanks. Hi, thanks for having me again. Last time I remember when I was on the show, Bitcoin just broke $20,000. It was like a huge event. Unfortunately, we don't have like this specific event today, but still, we are much higher than it was last time. Okay, so my name is Thomas Schmiedl. I'm CTO and co-founder of a company named Rubinstein & Schmiedl. And basically, we're an actively managed cryptocurrency quant fund with strong focus on artificial intelligence. So basically, we want to achieve outstanding risk-adjusted returns. And we employ cutting-edge artificial intelligence solutions for exactly doing this purpose, to especially limit the downside risk, because everybody wants to make money, everybody wants to be in crypto. Buy and hold is nice, but still people are afraid of the downside. And our job is to limit the downside risk actually and still produce quite nice returns. So my background basically is in AI, big data, artificial intelligence. That's what I've done my whole life. And that's it for me.
Thank you so much, Thomas. And again, I welcome you again to this episode of VCTV. Now we have Dr. Moraine. Hi, Dr. Moraine. Thanks for joining us again. How are you today?
Very well. Hello to everybody. So my name is Maren. I'm a venture capitalist, serial entrepreneur, and have been sitting on boards in various companies. Schweizer World is a family office I'm spearheading, and growth capital arm of Schweizer. Actually, The company roots go back to 1849, so you could call us a dinosaur, while being also a speedboat. We've been investing into 32 companies in the course of the last 3 years in 3 verticals. One is ecosystems, so that's pretty much digital, in mobility and electronics.
Right. I heard that before, dinosaur. I'm sure it goes back, way back, way back. Thank you so much, Dr. Marin, for joining us and making VCTV more special with your presence. Thank you so much. And I think we are set for the evening with 3 speakers today. So today, again, as I said, it's about institution money into cryptocurrencies. So my first question, why would institutional investor care now about digital assets? What's the risk return analysis for them? Who would like to take this question first? Thomas? Yeah.
Okay, so whatever you will hear from me is always a bit connected to statistics and the mathematical side of things. That's kind of my point of view. So one specific advantage of cryptocurrencies is it's a completely new asset class with completely different fundamental drivers and with the potential to be uncorrelated to existing assets. And whoever does portfolio management, whoever does risk management will immediately recognize there's a lot of benefits to this by diversifying into cryptocurrencies. And as soon as regulatorics, are available for institutions to do this, they will definitely, over the short or medium term, will figure out that it's amazing for portfolio and for volatility and risk mitigation to have some part of cryptocurrency exposure as well.
Yes, absolutely, absolutely. Agree to those points. Adrian, what about you?
I would like to refer to family offices in particular. This is a special breed in the institutional investors. I didn't work with such, I would say, entities until like about two years ago. And up until that moment, most of them were pretty conservative when it comes to technology startups, when it comes to cryptocurrency. And it was like a sparkle. And slowly, more and more of these entities started also to look in the tech space. Yeah. And with cryptocurrencies, I liked Marin mentioning the dinosaur. It's not about it's not necessarily a dinosaur thing, because when Marin,
I think we have.
When there is a family office with a big background coming from the 19th century, this is a huge advantage over how these entities are preserving wealth over time. And slowly, the cryptocurrencies became such a medium of preserving wealth, multiplying it, and we see companies like Debenhams, let's say, which was a very old one, going into insolvency, while other entities which have many years old already are doing the shift into digital assets, into cryptocurrency, so they can become, let's say, richer and richer over time. So this is what I'm seeing.
Oh, Debenhams, is this the retail shop?
Yes, they were bought recently by one or two online shops in UK. I believe Boohoo was one of the buyers. So all the assets were bought by them. So the brand didn't disappear, but the retail operation went into insolvency. They couldn't keep up with the transformations, and other players which were 100% online bought the assets and will arrange the retail areas as annexes to the online business. So it's very important to adapt. Very important to adapt.
Debenhams, I was a regular customer, a buyer at Debenhams, the shops. But I heard the news of them going into administration before 2020. It's good to know that they're into cryptocurrencies. That's a very good news. Thank you, Adrian, for sharing that. Okay, we've got Gary joining us as well. Hi, Gary. Good morning. How are you? Are you finishing off another meeting?
Yeah, no, I was working on something. We had a little emergency come up that I had to take care of with the company. Just normal business, you know.
Oh, yeah. Okay, I hope everything is okay and you are...
Yeah, no, things are fine. It's just that's what happens when you have a global company. You got little... That's like, my job is like, I feel like I'm steering a cruise ship, and my job is to keep the water from coming in.
Great. So let's just get your intro and background, then we move to Dr. Marin.
Yeah, sure. My name's Gary Fowler. I'm a serial entrepreneur and investor. I've done 17 companies, 2 unicorns. I was involved in the original management team of Click Software, sold for $1.35 billion to Salesforce, and also Eva.ai. I am the CEO, president, and co-founder of GSD Get Shit Done Venture Studios, a premier AI and quantum venture studio located in Silicon Valley. I'm an author. I write a lot, and I've written 125 articles now in AI and quantum and startups. So it's great to be here. It's great to see some friends today. I feel like it's family hour again.
Yes. We've got new members in this family.
Yes. Well, I know. Yeah. I don't know Thomas, but I think I've seen him before. Hi, Thomas. But Adrian and Marin, of course, and yourself, Sonny.
Thank you, Gary. Okay, Dr. Marin, I just would like to take this question from you. Why are institutional investors and family offices, because you represent a family you are a family office yourself. Now, why did you care about digital assets now?
I can resonate with what Thomas said, actually. For sure, family offices and also our family office, we've been a little bit reluctant going into cryptos for various reasons. It's about compliance. It's about, is that run really on a solid tech platform? Is it insured? Who's the custodian? And many, many other things. So, but meanwhile, if you do the right thing, it's a very interesting asset class as an alternative with interesting deals down the road. One thing I would want to mention at the beginning of our today's VCTV is, I think it's actually troublesome for many family offices I talked to really run that trading. It's a 24/7 high frequency trading that is required to be very successful. So how do you do that as a family office with your more classical style dinosaur asset managers?
Right. I got the rationale behind it now. Thank you for sharing that. Gary
I love that. Dinosaur asset managers. I have to remember that. I'm going to use that as part of my thing. Just a second. You could be a dinosaur asset manager. Be careful.
Yeah, if the dinosaur turns into a dragon, all good, right?
Yeah, right. But remember what happened to the dinosaurs, Marin. You've been good.
I think who was that yesterday's show? Reincarnation or something. The dinosaurs are getting reincarnated into dragons, right? Sorry, I'm just going all crazy today. Thank you so much.
This is one of those kind of shows.
All right. So Gary, over to you with the same question. Why should institutional investors care about digital assets, and what's the risk-return analysis for them?
Yeah, I mean, the situation, because our world is fundamentally shifting, and look what's happened in the last year through this digital transformation, and look at these developing countries that are rising. We need to bank the unbankable, and it's, we're working a lot. In fact, we'll be in Nigeria next week there's just tremendous opportunities. And, as we've democratized these opportunities, those dinosaur institutions had better keep up. They either keep up or die, right? The innovate or die. So the fundamental shift, I mean, look what's happening. I had a 4-star admiral on my show a few weeks ago, #2 guy in the U.S. military. And we talked about, with China rising over the next 5 years, China will overtake the U.S. We've got Africa rising, India rising. There needs to be some kind of a more global currency. And it's just the beginning. It's like a race. And now we're looking at who's coming out on top. And so far, it's Bitcoin. What these institutional investors, if they don't get in, I talked to my friend Gorham. In fact, I had a call with him a couple of days ago, and he's got $56 billion in Bitcoin, I guess. Anyhow, it's just the world's changed. And if they don't keep up, they're going to die. I mean, literally, you can't let Bitcoin's at 56,000. I remember my partner bought 20 of them at $6,000 and $10,000. And I was like, oh, don't do it. It's a bad thing. Now it's like, it's an amazing thing. So you can't afford not to do it. You can't afford, you just got to make sure you're betting on the right horse. So bringing AI and quantum computers in to understand how to be able to analyze it better is fine. But fundamentally, they need to keep up with the pack. You can't not do it. It's like e-commerce, right? When we did the first e-commerce consulting company, people were making fun of us. They said, oh, why would you want to do that? I'm not going to put my credit card online. Amazon just sells books, and I said, we met with Walmart. We met with a lot of the top tier retailers in the U.S. and abroad, and all the ones that shifted, things changed. Now look where Amazon is today. And same with Zoom, right? A few years ago, 5 years ago, another innovation. People said, oh, it's not going to work. I've got Skype, etc. But we're just at the dawn of a new era. Our world has fundamentally changed. It's going to change in the next few months, by the way. There's going to be another shift. The shift is going to be people are going to want to get out and they're going to want to see people again. And that's part of our need for humans, right? Need to be around each other. I think that shift's going to come back. It'll last about 6 months. And then people understand how efficient this digital transformation's been. The reason I'm saying that is that this idea of cryptocurrencies and being able to we trade in Bitcoin also. We do payments in Bitcoin because it's just really easy. We can do it in seconds.
Yeah,
so
absolutely.
It's just whenever you have new technologies, there's like crossing the chasm, as Jeffrey Moore said. People need to understand how to adopt it and use it inside their businesses. And now we're at a point where there's mass adoption taking place. In fact, right here, the gas station across from where I am has a Bitcoin ATM.
And they do accept Bitcoin ETF?
Yeah, here, right across the street. Now I'm in a unique neighborhood. Bill Gates is 4 blocks down, and I'm the poor guy in the neighborhood. I have the smallest place, literally the smallest, but I'm still here. I got like the shed to these guys, right? But it's so Quorum said he's donating 9,000 Bitcoin ATMs to universities throughout the U.S. because that's where things change. As you donate to educational institution and you start to see adoption, they start to use them. That's how I remember working with Scott McNeely at Sun Microsystems, and we worked in the educational sector. That's where you start to educate folks on a mass basis. And a few years later, you'll see the change. But anyhow, it's huge.
Wow. Yes. This is going to be huge after.
And look at Miami, right? So Quorum just put in $4.8 billion and 100,000, well, more than that now, 5.6 billion in Miami, and they're down there right now, meeting with Suarez's team in terms of investing in blockchain, investing in startups, that kind of thing. So he's putting his money where his mouth is.
Wow. Great. That's the first question. Let's talk about let's just discuss and give our audience a bit perspective about the global trends. So what are the global trends that we see in digital asset investing, asset allocation? So where do these digital assets fit into institutional portfolio? Let's talk about all over global trends coming from all over the world. Let's start with Thomas.
Okay, sure. So I might be a bit biased on the AI side because that's what we do. But basically, let's see. Okay, there's like this new level of cryptocurrency, and we have seen that they have the potential to be uncorrelated to traditional assets, which is good for risk management and so on. So people start to recognize this, institutions start to recognize, and they want to invest, and there are currently also and already vehicles for doing this, for managing buy and hold strategies mostly, and also like actively managed, but by humans. And personally, we see a trend that a currency which is traded 24/7 at the weekends, which requires a lot of attention and is fundamentally digital in nature, requires also a digital way to manage, actually, like an automated and an intelligent way to actually manage funds. So that's the trend that we see, and we are responding to this by offering more and more solutions on the AI actively managed crypto portfolios. So we're currently trading in a 5-minute basis, creating a few million trades per month, ensuring limited downside risk, because that's like point 2 I want to mention is now people, okay, there was a time when people were doubting that, there will be some momentum in the cryptocurrency markets. Now, obviously, now we have momentum. People made profits, but now they are kind of afraid to lose the profits that they made. People start to be a bit more risk averse. That's our feeling. And we're responding to this, tailoring, AI strategies that limit downside risk and help people to actually, retain, the profits that they made. So that's basically what we feel on an investment side. There's more trend into actively managed, but automated without people getting tired, and all the benefits you have on the weekends and at night and so on.
Yeah. Cryptocurrency exchange business is 24/7 business. I mean, we all know that. Thank you, Thomas, for that. Next, Adrian.
The 24 hours nature of cryptocurrencies is something I love. And as Thomas said, during the weekends, because the stock market is closed, the activity is even higher in the crypto markets. I would like to refer to something I'm looking very deeply into it, the world of NFTs. And one of the asset classes which is common to institutional investors are investments in art and unique stuff, which can have a huge return on investment over time. And the auction house Christie's, I believe, is the first one which addressed the NFT market, the digital art market. Yeah. So added a new layer and added this type of assets into the world of institutional investors, the rich of the rich, because it is said that it doesn't matter if overall we are in a crisis or in a boom, usually richer get richer and poorer get poorer. And usually the ones having most of the money, they are becoming richer and richer. This has happened last year. And usually the institutional investors, they have the resources, they have the people, they have everything to preserve and multiply wealth. And one trend I'm seeing is the adoption of NFTs by institutional investors, which is a very interesting trend. And I believe that the transactions grew with like 400% in February over January or something like that. Is a huge market, which is not a new market, but it's at the beginning of a new stage. And of course, it will be very important to see if these NFTs, which are chosen by institutional investors, will have for real a good return on investment over time. It's a very interesting bet, a very risky one, but with a lot of risk also comes a potential big reward. And if it is a small percentage allocated into that from the overall pool of assets, I believe it can be a very good bet.
That's a great point, Adrian. So between Bitcoin and NFTs, so there's basically a kind of, these are the two big currencies that the institutions are focusing on, is it?
With Bitcoin, if you ask me, I believe it's a little bit of institutional bubble, because if you look at the stock market, it's like, I don't know, when some funds are investing into certain stock, other funds are saying, okay, if these guys are doing that, I will copy the strategy and I will go buying that. When these funds are selling, the same, everybody's selling and the price goes down. The focus is not only on Bitcoin, because even, let's say, even if Bitcoin will reach, let's say, $100,000, still will be like a 2x potential multiplication. But there are other coins like Cardano, for example, or Tezos, or even Ethereum. Ethereum has a lot of problems with the gas fees, but they say that the system can be scaled 100x over the next period. So Bitcoin should be like a part of a little bit diversified pool of assets when an institutional investor creates a portfolio, because, and this is something many people don't like to hear, but if you look at Bitcoin, so Bitcoin as an asset, it's a decentralized one. But around, I don't have updated figures, but figures are around that, like 90% of the Bitcoins are owned by like 2,000 wallets or something like that. So the majority of Bitcoin is owned by a small percentage of assets. And even from all the Bitcoins, a small number is actually in circulation, because all the others are holded somewhere. And this scarcity over this asset creates the huge demand and the huge growth in price.
Right.
It can be a bubble until a certain moment. So that's why Bitcoin should be part of the portfolio, but not the portfolio itself, because there are many things which you can't control.
That's interesting. That's very interesting. Okay, Dr. Marin, your insights, please. Thank you, Adrian, for that, sharing that with us.
You're welcome.
Thanks, Adrian. I'll come to the control point in a second, but first to Sunny's question. So what is happening? What's the trend? A lot of institutionals are moving into cryptos, and they talk about it. And that's probably the difference to family offices. We do it and we don't talk about it. What we do, we actually reskill our dinosaur asset managers to do something else, because technology can do it a lot better. And for sure that reskilling is done with technology, because we believe in online education to have that done. So regarding Adrian's comment, control. Certain things I think you cannot control. You just need to make sure that you manage them. So for us as a family office, beside risk-return ratios and mitigating downside risk, and that is what machine learning can do, what automated trading can do, the algorithms can do in high-frequency trading, 24/7. They can do it, and they've proven to be able to do it. Actually, regarding Thomas, we got introduced in 2019 when we met the first time in beautiful Munich. And I've been observing that on behalf of the family offices, of our family office and other family offices we talk to, because it's family and friends club kind of. So I've been observing and got really convinced it's the better way to do it with machine algorithms than trying to do it yourself with a small team, a big team, even a team that is trading 24/7. You can do that if you have the size. We've heard it. Everyone control. Certain things you cannot control, but you can manage them. So, yeah, corporate partner, get yourself on board a trading platform that has an insurance coverage. Then certain risks like issues with the server, issues with an exchange could probably actually be covered by an insurance policy.
Yeah.
Because that risk is a risk you need to discuss internally in family offices, especially in multi-family offices, because they do have several families behind and are acting on behalf. So for them, it's a little bit more complicated, I would say, than for a single family offices as ours, because it's our own money. But yes, we need crypto because it's an alternative asset class. And I think we should also keep in mind what is happening to many currencies with all the debt sitting out there. How do you get rid of debt? There are many ways to do that, but you don't want to be in debt. If actually a currency is being devaluated, is being inflated, or others. So crypto is certainly something you want to have some eggs in the basket.
Great. So I'm going to come to Gary, over to you. But good coming from insights from family office themselves. Obviously, crypto is considered as one of the asset classes the dinosaur asset managers are going to get trained on.
No, they are reskilled. They're not going to do it. No, it's the opposite. Reskill with digital education for something else.
Absolutely. Got it.
For more classical asset classes. Maybe also just to do the deal flow and the analysis on the venture capital side. You know?
Got it, Dr. Marin. Thank you so much for sharing those. And I'm really excited to know that. I think this is the first time I'm speaking about our family office, and I'm really happy that you are supporting that this asset class. Thank you so much. Gary, your insights, please.
I think that's called evolution.
Reskilling.
Exactly. So one of the things I just want to mention, this Adrian had talked about the NFTs, and I was on a panel a couple days ago, and it's kind of like there's some really cool stuff, but then you get crypto kitties, and they're selling crypto kitties when they breed for $100,000. It's like, we got to be careful that we're not into this Dutch tulip phenomenon. I mean, it's when you look at it, some of it starts to become absurd. And yes, I agree with art. I agree with their items. I just see that a tweet was sold for a couple of $1 million. The first tweet by Jack Dorsey. So there's some interesting things. We we got to be careful. There's irrational exuberance, as Alan Greenspan said many years ago. We got to be careful we're not caught up on it, because if you caught up in the wrong situation, when it starts to tank, it goes right to the bottom. And I've seen it many, many times through, the whole .com bubble. I mean, they had pets, sock pets, and they had the pets.com, I think it was called. They had the sock puppet. And there were some obscene things that were happening. And I hope we're not going down that path too. So just be cautiously optimistic about it and just use your common sense. Don't be caught up in this herding mentality that's out there. And Adrian's right in terms of diversification. You also got to make sure you've got, you're spread out a bit so that you don't get killed. If something goes down, Ethereum 2.0 is coming out. And Ethereum has some challenges, but at the same time, you get companies like Microsoft or Amazon start to really support it. So, look at it. Keep your eyes wide open. it is an entirely new world. I mean, think about how many changes are taking place with cryptocurrencies, with NFTs right now. I mean, look at Sotheby's and Christie's, and now you got name brands behind it. It becomes real. Once the name brands start to put it on, people, it's almost like an insurance policy. They start to become comfortable with it. So it's going to be interesting. I mean, when you start to democratize opportunities for people to buy things, and you get a fraction of a Picasso painting, right? And you can say, "Oh, I own a Picasso."
Yeah, there you go. NFT.
Yeah, NFT, right? So it's interesting, and you're going to start to see, we're going to see more adoption, not only on the crypto side, but you'll start to hear about more NFTs. You'll start to hear about more companies starting to get involved with it. But I mean, fractional ownership and things like timeshares, it's not something new, right? We've had it for a while. But where's the limit going to be, and how high is it going to go? I mean, it's amazing the kind of things that are being sold, these NFTs that are being sold right now that are just obscene. I mean, I think you could sell a pair of stocks right now and make money on them, actually.
Who knows? Who knows, Gary? Yeah, there you go. You have a point.
I mean, that's when it starts to be obscene, right? And
yeah, exactly.
Funding too. I mean, you look at it, some of the stuff that's out there that's been crowdfunded, it's just, there's this exuberance that's out there, and people put their money in something that doesn't really exist yet. Yes, some of it does, but sometimes it never comes true. So anyhow, just be cautiously optimistic.
Yes, absolutely. Yeah, we have to be, when it comes to cryptocurrencies or any sort of digital asset classes. Being first-time investors or reskilled investors. Thank you so much. So talking about custody, digital asset custody, online hacks, cold storage, and the next frontier investment structure. How do we compare a traditional fund versus a direct holding digital asset trading? So how do we compare that? Thomas, over to you.
Again, please, which both things we compare? I'm sorry.
So we have a digital asset custody, right? Mm-hmm. Then we have the traditional funds,
Okay, so there are many things, especially on the IT security side of things, that need to be recognized here. So when you look at, a good example is actually a ledger or a Trezor wallet, basically. So what people basically using the funds need to understand is basically there are keys on this device, and the keys are the only way to manage the value which is hidden, or which can be basically transferred using them. And this has a lot of consequences, of course. So people need to really take care of also funds and custody. I think need to really take care of IT security standards. That boils down to, for example, HSMs and hardware modules that actually need to basically be up to date and have the highest standards. IT security is even more important in this part, in my opinion, because you cannot bring funds back that have been sent. There's no way. That's how the blockchain works, basically. And the other thing is digital use cases increase a lot. So normally, when you look at smart contracts, for example, they open up a huge potential for digital interaction. And whereas, in a traditional sense, you had the fund custody solution, and maybe, the fund manager was calling the repository and said, okay, let's send me, a few bucks. I need to trade them. That was like the traditional procedure. Yeah. But now there's many ways funds can be used and moved using smart contracts. You can do like lending, you can use DeFi, swaps, and so on. That naturally opens up more doors that need to be secure. That's one thing. So you need to, IT security needs to be emphasized a lot. And also a good a good side, actually. That was kind of, not the downside, but something that needs to be regarded a lot more, in my opinion. The good thing is you have much more flexibility. The money is programmable now, and this opens up actually use cases that were previously not that easy to realize. Let's say you want to execute like a specific investment plan or a specific algorithm or something, or like as we do like an AI strategy for trading. Timing is really important. You need to count on events, happening at certain, events or points in time. And the first time this is actually possible, reliably possible with guarantees, is using programmable money and cryptocurrencies. Like you can think of completely new use cases of sending stuff and investing, which is amazing. So, yeah.
Amazing. You just got the answer spot on. Sorry, Gary, you wanted to say something?
Yeah. What did he say about programmable money? I didn't. Tell me a little. It's interesting.
Okay, so traditional way was that the only way to access the funds was, via phone, or you call the broker or something, or the repository. But now you have many ways to structure the investment process on top of this just calling people. Like you could say, I want to use some parts of the funds that investors gave me. Basically, I want to put into a lending contract or something. I want to do yield farming, for example, with one part of the funds. But then I have to secure this part. It's important. That's like a lot of potential on this side. And the other thing could be I'm using some parts of the funds for an algorithmic trading strategy on an exchange. And then I can say, for example, easy use case that we're actually facing. So let's say we want to diversify among exchanges to reduce counterparty risk for our trading strategies. And it's easy now to automate like the process. Like let's have only 10% of capital on exchange XYZ, and you can have a fully automated system that rebalances and so on. Whereas in the past, you needed at least some person, making calls and making paperwork. But now, due to this high level of automation, you can automate things that have never been able to be automated before.
Got it.
Yeah, but great, perfectly explained, Thomas, the technical details. Thank you so much, and thank you, Gary, for the question. Adrian, over to you with the same question.
I'm a very practical guy, and I'm looking at how cool are the most established exchanges right now. The legends in crypto said that never leave your money on an exchange if you don't trade them. But if you look at Binance or LATOKEN, of course, but if you look at Binance, for example, you can do staking, which is exactly like keeping your money into a bank account to collect interest.
Yeah.
And such entities can, I believe, will provide the type of private banking services which are provided by regular banks. Because if you have some funds, and this is a basic example, on a cold storage device, and when you connect that device, a hacker will steal the funds. You can't do anything. Usually, if a hack happens in Binance, they have a fund. They can trace all the funds, and usually the funds are recovered somehow. So I see a very big future in this type of services for institutional investors, which are somehow connected with the liquidity of the big exchanges, where if something bad happens, there is also a disaster recovery plan, which is not common to the usual cold storage. And of course, the custodian aspect is also a big opportunity which is underserved for the moment, from what I'm seeing. Of course, I may be wrong. And will be private banking, I don't know, private exchange, how you will call it, for this type of customers.
Right.
It's a very interesting niche to be developed.
Yeah, it's a very interesting space. Thank you for sharing staking as well in that. Thank you, Adrian. Dr. Marin, your insights?
Well, overall, it's all about IT security. As we all know, it's digital, and Thomas has given us some great insights today from a CTO technical expertise point of view. So we're only looking at the security side of it because at one day something will go wrong. So as a rule of thumb, from our point of view, we are looking for an insurance coverage for all of our service providers who are engaged to avoid the loss of funds.
Yeah.
However that happens. And yes, more and more custodian services are up and running. Traditional banks are moving into providing custodians. That's happening. But most we've seen so far, the custodians that are out in the market are not flexible enough to really take advantage of technology, what you can really do. It's too classic. So let's call them dinosaurs to a certain extent.
Right. Thank you, Dr. Marin, for your insights. Gary, would you like to add something here?
Yeah, I mean, the situation, so Dr. Schweitzer came up with some interesting points. The whole idea, the cybersecurity, we better think about it when we start putting things online. It's not like having thousands of euros in your wallet. It's a whole different deal. You got risk. So I'm not sure. We need to look at things like decentralized cybersecurity tools like SplitByte. We need to look at what the impact of quantum computers is going to be. I mean, think about how massive. I said it earlier. I had a 4-star admiral on my show a few weeks ago, and we were talking about all kinds of things, and we talked offline about cybersecurity. And with quantum computers coming on, think about something that's so massive that you can process something that would take that's 100 million times faster than a supercomputer, that can do what would take 10,000 years on a supercomputer in a matter of 200 seconds. So, they're coming on, and you see now, when you start to see grids starting to be attacked, there are quantum computers out there, and they are probing. So they're not at the maturity level that they're going to be. But think about if you put a quantum computer and go out to the exchanges and focus it, how much money is going to get taken? Really? And, we either look at things like decentralized cybersecurity. And I say that because it's one of the ways to, quantum resist or quantum proof these exchanges. It's also all of us. Think about all the companies. We're moving in this digital world. Look at Tesla. So we're vulnerable. Anyhow, those are one of the things that I need, from my standpoint, we need to really move up in the value chain and start to look at very, very carefully, because with this herding mentality, there's going to be a whole lot of risk, and it could be the perfect storm. It's like, imagine if you're a hacker out there and you've got access and you're in some rogue place, rogue nation, and you focus on exchanges and you just put your resources on that. What's going to happen? Nothing good.
Yeah, absolutely. Absolutely, Gary. Cybersecurity, I mean, everywhere, all sectors is very...
I mean, with the digital economy the way it is, and this move with digital transformation, our information's at risk. Think about it. The data, as I've said numerous times, the amount of data on the planet is 40 zettabytes. If you took CDs and stacked them one on top of another, they would go 29 times between the Earth and the Moon, and growing at 67 to 68% per year. So it's at risk. So.
Absolutely. Thank you so much. I've got another question. When it comes to institutional money, getting into the digital asset classes, so how can blockchain technology, how does the technology works for anti-money laundering? How do they tackle the anti-money laundering risk, and how can they be managed? Thomas, would you like to take this?
Sure. So maybe a baseline response, how it's currently being processed, and then maybe some idea for the future, which I'm sure people are already working on this. So the current thing is like, depending on the country, there are like standard KYC, AML, requirements. That, for example, when we onboard new investors, we need to ask them certain things. It goes the same old traditional route, which is okay in this case, because that's what the regulators understand. That's what they are comfortable with. So we use it and it's fine. So that's currently the traditional way. But since we're talking about blockchain here, there's like a nicer way to do this, potentially, or obviously, by putting identities in some way or the other on the blockchain, which poses interesting challenges. I don't want to dive into this, but the question is, when you have identities online, you want to only disclose certain things, which is an interesting challenge on the public ledger, which can be solved using zero knowledge proofs. So there's a lot of things and a lot of research going on in this regard. Personally, I think that this will be big. But to answer the question is, I personally think there will be more services in the future where identity is stored online with the ability to only disclose certain things, which might be especially using in the KYC AML process to prove, without disclosing anything unnecessary, to prove to funds and to the regulator that you're eligible, to invest this money. And this will be quicker, this will be global, this will be borderless. You can invest, in different countries, same standard, same protocol. That's amazing thing, actually. People should do this. Yeah.
Borderless. I really like that. Yes, quicker, faster. Absolutely nailed it. Thank you so much, Thomas. Adrian, would like to add something here?
Of course, with all the established platforms, you can't do anything at a pretty medium, large scale without being identified as a customer. But of course, cryptocurrency is still a space for people who want to do shady things. But with all the public ledgers, basically, all the funds can be traced, and I think that, and Thomas touched a very important point about stealing the online identity, and this is, and still will be a big problem. I would say that more and more this market, with all the regulations, with all the things that are happening, will decrease the level of where shady people can operate, but will happen over time. It's like with DeFi applications, those called rug pulls. So basically, the liquidity is withdrawn without any without any prior notice, and the funds are lost. So these things will happen, still are happening, but slowly the market will be cleaned, and we all have to work for that. It's a very important goal.
Yeah, sure. Thank you so much, Adrian. Dr. Marin?
We are moving into a digital age, and it's been accelerating. COVID has been an accelerant. We've witnessed that in many industries. So looking down the road, the more digital things get, this includes also a KYC process, the more vulnerabilities will be up in there. I have difficulties to pronounce that word. Vulnerabilities. So then you need cybersecurity measures. That requires computing power, and computing power actually requires technologies with more bandwidth at lower energy consumption. So this is actually a circle that is closed. So I think we have to look at all kind of aspects. to answer your questions, yes, there are shady people, guys, corporations, whatever out there in the crypto space, but that will be managed down the road because technology is there to solve the problem. And the regulators, they will have to jump in more and more in the crypto space to make it adoptable and to avoid an explosion we all don't want to see.
Absolutely, absolutely, totally. So we all are like obviously in the same direction when it comes to regulation. Gary, your thoughts about it before we wrap up the show?
Yeah, I mean, it's not like this is a pipe dream. It's already being looked at. So this whole idea of, KYC using the blockchain, IBM's doing it right now with Deutsche Bank. So they call it the Shared Corporate Know Your Customer Initiative. It's a project. So it's not like the good news we're thinking about, I think it's a great idea. Think about the implications for healthcare systems and to reduce the risk they have, identity theft and that kind of thing. So it's being worked on, or we're just in the infancy. We're in the infancy in so many different stages right now that it's incredible, right? We got crypto, we got quantum, we got AI, unsupervised AI, semi-supervised. There are a lot of convergence of these technologies. Then we got cybersecurity that needs to be implemented, or we're going to have some challenges across the board.
Perfect. Great. It was a fantastic, insightful session as well. Thank you so much for your contribution and participation and sharing lovely insights. Thomas, very technical, and Adrian, same. And I'm very happy and very surprised in a good way, Dr. Marin, that you are investing in crypto digital assets space as well. Coming from a family office, it actually obviously encourages other institutional players, be VCs or family offices, to come in this space as well. So thank you so much, Gary, as well, with your insights as always, as a family hour, as we all know. Thank you so much. And I'll be back again tomorrow with another topic, another set of speakers. Till then, I might see some of you in the coming days as well. Until then, take care of yourself, stay safe, and I'm going to see you again. Bye-bye.
Bye-bye.
Thank you.
Okay, did we end?